That's what gold reflects. Nobody sees that, but is that gold is not going up. An ounce of gold's been worth buying the same thing, whether it's a suit of a man or food or whatever, buying the same
Mhm.
thing for thousands of years. Prices in gold haven't gone up. It's just
Yeah.
that the value of paper money has gone down, and that's the world measures their wealth in currencies that are declining now at a
Mhm.
very rapid rate. And
Mhm.
you and I think that that's going to accelerate in coming years. I mean, the end of the monetary era first normally leads to inflation, hyperinflation. And I think we are seeing that in the real prices, not in the government fake figures, inflation figures,
Yeah.
but the real prices are going up dramatically now. And this is
Yeah.
why we come back to gold again.
Gold continues its upward momentum, marking 3 consecutive days of gains after successfully breaking above the 55-day simple moving average of $2,654. This surge comes with higher global yields reflecting growing market inflation concerns. The precious metal's strength aligns with warnings from Egon von Greyerz, founder of Switzerland's Matterhorn Asset Management. Von Greyerz, known for his expertise in wealth preservation through precious metals, emphasizes that gold's apparent price increases reflect the declining value of paper currencies rather than changes in gold's intrinsic worth. He argues that gold has maintained consistent purchasing power throughout history, serving as a reliable store of value for thousands of years. Market attention is focused on the Federal Reserve, with multiple policymakers scheduled to speak on Thursday. The recently released December Fed minutes provided little new insight regarding interest rate expectations for 2025. Meanwhile, the cryptocurrency market has experienced significant pressure, with Bitcoin posting substantial losses this week amid soaring yields, a scenario reminiscent of the 2023 market conditions that preceded the Silicon Valley Bank collapse. Federal Reserve officials see a rising risk that inflation may remain sticky in the U.S. as policymakers begin wrestling with the impact of policies from the incoming Trump administration, according to the minutes of the U.S. Central Bank's latest meeting. Von Greyerz raises particular concerns about official inflation statistics, suggesting that government-reported inflation rates may not accurately reflect real-world price increases. The current market dynamics and President-elect Trump's announced policy initiatives, including stimulus plans and tariff reforms, have intensified traders' concerns about potential inflation spikes. These factors continue to influence traditional and digital asset markets, with gold maintaining its historical role as a hedge against economic uncertainty. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
The sad thing is that the world doesn't understand gold, doesn't understand what's happening to their money. And as I said before, the people believe that there is inflation. And talking about inflation, wherever I move around, especially in Europe, every country, whether it's France or Italy or England or Sweden or Switzerland, inflation
Mhm.
is not 2, 3% or 4% maximum. Well, normally or generally, most countries talk about inflation of 2% today, maybe slightly higher. It's not 2%. If wherever you go, things are 10, 20% higher. It's just
Yeah.
ridiculous, these inflation figures.
Yeah.
They're
Yeah.
just politically manipulated figures to
Yeah.
protect the government from the attack of the people. But anyone who goes to a shop or buys insurance or travels, they don't see that the prices are up now. I think they're going up exponentially, and it's frightening. Actually, people are not going to make ends meet already now, and that's going to get a lot worse. And as we
Mhm.
said, that's what gold reflects. Nobody sees that, but is that gold is not going up. An ounce of gold's been worth buying the same thing, whether it's a suit of a man or food or whatever, buying the same
Mhm.
thing for thousands of years. Prices in gold haven't gone up. It's just
Yeah.
that the value of paper money has gone down, and that's the world measures their wealth in currencies that are declining now at a
Mhm.
very rapid rate. And
Mhm.
you and I think that that's going to accelerate in coming years. I mean, the end of the monetary era first normally leads to inflation, hyperinflation, and I think we are seeing that in the real prices, not in the government fake figures, inflation figures.
Yeah.
But the real prices are going up dramatically now. And this is
Yeah.
why we come back to gold again, because all gold does is really, well, number one, If you hold it outside the banking system in physical form, then it's your money. It's nobody else's liability. And that's it. And now with the banking system that is on the verge of collapse, the debts we're talking about and the bad debts are escalating rapidly, and the banking system is most likely going to have problems much bigger than we had a year and a half ago, 2 years ago, when Silicon Valley Bank collapsed, and also, of course, the Credit Suisse in Switzerland. I think we're going to have a serious crisis, a banking crisis, that also will lead initially to massive, massive money printing until they can't save the banks anymore. This is why people have to protect their wealth by having assets, real assets outside the banking system. So, yeah, but that's the prime function of gold, as we know. And number two is it protects the holder of gold against the debasement of the currencies and the falling value of their money in their pocket or in the bank, and the rising costs of all the goods. So it's so simple. That's why governments will not tell you this, because they are not going to tell you the truth. They don't want to tell you that they mismanaged the economy. And except for the Chinese government, basically no government tells their people to buy gold.
The erosion of paper currency value has reached critical levels, with many significant currencies losing over 99% of their purchasing power since the abandonment of the gold standard in 1971. Financial expert Egon von Greyerz highlights this stark reality, which brings new relevance to Voltaire's historical observation that paper currencies inevitably trend toward their intrinsic value of zero. Particularly notable is the trajectory of the US dollar, which has experienced a staggering decline in purchasing power over the past 5 decades. This deterioration fundamentally affects the dollar's ability to command goods and services globally. The situation becomes especially concerning given the greenback's historical role as the world's reserve currency. Since 2000 alone, major global currencies have surrendered approximately 80% of their value, marking an unprecedented pace of devaluation in modern economic history. This trend has sparked increased discussion about de-dollarization, particularly among nations heavily dependent on the US dollar for international trade and reserves. The situation presents particular challenges for countries like Papua New Guinea, PNG, which finds itself vulnerable due to its significant reliance on the US dollar. Financial experts advocate for proactive policy measures in such nations, suggesting the need for comprehensive economic strategies that address this shifting global currency landscape. Let's get back to the interview.
Looking at risk, I think, of course, we are at the end of a monetary era, an era that probably started when the Fed was formed in 1913 or 1971 when Nixon closed the gold window. And I think eras don't finish quickly, but as I have explained in many articles and interviews, that I think we're entering the exponential phase of that era. And that means that, you see it in all areas of the economy and of politics. You see, look at all the countries in Europe, for example, all have political problems. They don't have any proper leadership. France and Germany, the biggest, two of the biggest economies in Europe, they're having massive problems and no leadership. Change of governments. UK has got the most disastrous government with the Labour Party that is already, if there was an election tomorrow, they would not be in power anymore, although they had a great majority only a few months ago when there was an election. And that's what's happening. On the other hand, and Matt will talk more about that, in America, of course, now we have a president that actually, the incumbent president, who has a majority. But that will also, America will have major problems also. So the political risk is major. Of course, we worry a lot about the economic risk, and that is not going to change. The debt is going up exponentially, and we foresee now deficits in all countries accelerating further, and therefore debts accelerating further, and therefore, of course, inflation going up further. And remember that inflation is not prices going up. Inflation is the currency going down. And there's a major difference. Government always says, well, prices are going up. But it's not. It's just the value of the money, your dollar or your euro, your pound in your pocket, that's going down because governments are continuously destroying the value of your money or of your currency. Just we look at I've shown that example before. 71, you bought a 400-ounce gold bar for $14,000. Today, that gold bar is worth $1 million. And that's not the gold price going up. That's your currency, whether it's the pound or the dollar or the euro, going down by 99% since 1971. And you only if you even if you take just this 2000, most currencies are down about 80%. So this is the real disaster. And as Voltaire said, every currency will reach its intrinsic value, which is zero, and that's what we are on the way to now. So that's that's a major risk, and that needs to be protected. We believe, or I believe strongly, that the stock market is going to collapse. Whether it's going to do it this year or not, I think there's a high risk that it will do. Stocks are massively overvalued. Matt will talk more about the details of that. But that overvaluation, no trees grow to heaven. And as I said, we're not just going to see a correction now. We're going to see a major downturn in stock markets.
Gold's resilience amidst inflationary pressures and currency devaluation underscores its enduring role as a safeguard against economic volatility. As traditional currencies face unprecedented erosion of purchasing power, the precious metal's stability shines as a critical asset for wealth preservation. This dynamic and evolving global economic policies and market uncertainties reinforce gold's relevance in a rapidly changing financial landscape. How do you foresee the evolving global currency trends impacting the role of gold in the future of economic stability? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.